The man who moves a mountain begins by carrying away small stones. Confucius. My friends, small stones each and every day, 10 to 15 minutes. That's what we ask you to do. Those are your small stones. That 10 to 15 minutes a day tuning into the market. This is not a part-time job when it comes to tuning in every day. That 10 to 15 minutes is your full-time job each and every day. Otherwise, you will not learn the nuances of the market. It will not happen. So set aside the 10 to 15 minutes. Don't require you to do it during the market day when you're first starting off. Now, of course, when you're doing your practice trading, you're going to want to look a little bit, but you can do that with a phone app, with any number of things. But to begin with, just sit at your computer, on your phone, listen to what it is we're doing, fill out your daily market worksheet once a week, your weekly market worksheet, and the trade worksheet every time you do a practice trade. And you might say, what are these trade worksheets? How do I get them? They're free. They're in your show notes every day. If you're not a subscriber, go to chartingwealth.com and sign up. Not only will you see the PDFs of those worksheets every single day, you'll also get our daily trainings as well as this review that we do each and every day. The daily training today is, do not allow the complexity of charting to scare you away. Great Einstein quote in there. Again, just urge you to spend the time with us. Let's jump into these charts. Stocks up. Everything else is down. Let's go first to the S&P 500. We see it moving up higher high. This market just keeps, what does it do? It goes up, maybe down and sideways a little bit, goes up, down and sideways a little bit, goes up. One day it won't go up anymore. When is that? I can't even begin to tell you. None of this makes any sense, but it is trackable. That's the beautiful thing. We can still track it. It doesn't make sense, but it works. So practice trade with us. Let's see what's going on. Look at this divergence that continues. As the market moves higher, the price percent oscillator is not crossing over on the S&P going up. The leading indicator, the derivative oscillator, which is what? It is a triple smooth version of the relative strength index. It is our leading indicator. It is moving over, going up. It has been losing energy since it bottomed back on the 25th of June, the week ending then. Things are moving up. Now, as we look at the 2-day, and we don't quite have a crossover yet on that price percent oscillator on the weekly. On the 2-day, it crossed over back on the week ending the 7th of July, up 2 weeks, sideways on the week ending the 9th, and then this week starting off heading up. Derivative oscillator positive, price percent oscillator heading up. Half day, we saw it cross over going up back on Friday, and we can actually change around our trend line. There we go. 2 days of decent up movement. That derivative oscillator, pesky, it hasn't turned over yet. Maybe it'll rotate over tomorrow. Price is well above the 2-day trend line, and again trending nicely for about 4 moves, heading right up that half-day trend line. That's where we are on the S&P. Now, of course, we look at the Nasdaq 100. We had that weekly vertical crossover back in June. Now, there's something I can do. I hesitate to do it, but I'm going to do it just so I get a better figure. If I go to the candlesticks, I can tell you where things were. Let me close this out. When we had that weekly vertical crossover, somewhere around the 358.64 mark, 358.64. Now I'm going to go back and change things to my Heikin Ashi candlesticks. There we go. And remember, Heikin Ashi candlesticks are a different method of actually computing the candlesticks. It shows us, Heikin Ashi in Japanese, I'm told, means average pace. And it gives us the average pace. It's the reason we use the Heikin Ashi instead of the regular candlesticks. But the measurement is different. So as we get to the close of the market, it wasn't telling us where things were. But they were at the 358.64 mark. And where have things gone to? Well, they've gone as high as well, let's see, 362.89. So from 58 to 62. And almost another dollar there. So what, roughly $4+ over a week and a day. That's not bad. I mean, it is a big, it's a $360 something ETF, but again, not bad as things have moved up over this. Price percent oscillator heading up, derivative oscillator gaining upward momentum today. We can see where things slowed down at the end of this last week and picking up as we move into this new week. Let's see if we can draw a little bit better trend line as we're tracking what's going on so far this week. We'll just leave it where it is right there. Derivative oscillator losing a little bit of momentum. Price percent oscillator slacking off a little bit. Half day, we can see that even with 2.5 days of movement heading up, not enough for the price percent oscillator to cross over on the half-day chart. That's very interesting. Derivative oscillator -2. Really comes from that huge pounding down the market took on the morning of Thursday, but again has recovered and moved higher. So far, that Q's trade is going all right for us. What about bonds? Well, bonds, of course, have been tracking up for the last several weeks since we had that 2-day recross. We'll see that in a minute. Starting the week off a little weak, 0.13% down. Where things did really peak was last week with a high of 149.44. The high so far over the course of Monday, 147.23. So not reaching that. That's the reason we have that red open box candle. Slow down in the up movement. Price percent oscillator still going up. Derivative oscillator about flat. 2-day chart. This is where we see that real weakness with almost a doji there. A little cross as things continue to deteriorate on the price percent oscillator and the derivative oscillator on the half day. And then, of course, that's where we can see where things had peaked on Tuesday morning last week on the 8th of July, and then sort of rolling off and heading down since then, crossing over, going down in the morning on Monday. And what we will do is we will go ahead and redraw our trend line, see where that takes us. That is where we are on bonds. Again, still moving up on that weekly chart, but weakening some. Not a lot for the day. But again, starting that week off, we can see some inherent weakness in there. What about gold? Well, gold down for the day, just a little bit, 0.11%. Hoping gold is leveled off and is going to start moving up, but that price percent oscillator flat, derivative oscillator gaining downward momentum. 2-day chart, we saw 6 days of up movement and then starting the week off weak. Still don't have a crossover on that 2-day derivative oscillator, still losing downward momentum. The price percent oscillator is heading up, but still negative. Half day, we can see where those things ran up. Down movement in the morning on Monday, bit of a recovery in the afternoon. Price percent oscillator positive, fairly flat. Derivative oscillator has been losing momentum since it peaked back on the afternoon of Wednesday, the 7th. So we'll continue to watch gold. I want gold to flatten out and then cross over going up and give us the ability to ride gold back up again. You guys know how much I like gold. Lastly, let's go to Bitcoin. Down for the day, not much, particularly for Bitcoin, 0.27%. So just over 0.25% down. What's important? Price percent oscillator still heading down. Derivative oscillator continuing to lose downward momentum. So maybe it's reaching a bottom here. Maybe it's just slowing down in its descent. What do we see on the 2-day chart? We see just a sideways slide. Somewhere where it's been touching around that $33,000 mark. Is that going to be the bottom? You know, we had Bitcoin crossover back on the 7th. Around that time period, but what's price done? It's actually devolved. Price percent oscillator is positive, barely pulling away from the red signal line. Not much happening with price. Derivative oscillator about flat on that 2-day. And we can see where the half-day chart, price percent oscillator, is trying to pull away from the red signal line. We had that real downer where things hammered down most recently back on Thursday the 8th. Things had really hit their low, of course, back on Tuesday the 22nd of June, and then sort of rallied a little bit, sunk, rallied a little bit, sunk. We'll just have to see what Bitcoin's going to be up to. Still got inherent weakness on the weekly. 2 days looking a little better. Maybe we got a bottom coming. We'll see. That's where we are, folks, as we end the day. Thank you again for all of our Patreon supporters, all you book buyers. God bless you all for your support. We appreciate you appreciating us. God bless from the whole team at Charting Wealth World Headquarters.